Man, crypto, right? Like, I swear, just when I think I've wrapped my head around it, boom, something new pops up.
I hear you. It's like this constantly moving target. You blink, and the landscape is totally shifted.
Exactly. So today we're doing a deep dive into some of the recent developments, the stuff that could really change the game. I mean, we've got institutional interest in altcoins, stablecoin shakeups, even some surprising moves from countries looking to jump into the crypto space.
It's a lot to cover, but it's all connected. And honestly, it gives us a glimpse into where things might be headed.
Okay, so first up, Fidelity. Now, these guys manage a ton of money, right? Institutional investors, the big leagues.
Right, huge players in traditional finance.
And they just filed paperwork for something called a Fidelity Solana Fund Trust. That sounds pretty official, doesn't it?
Oh yeah, that's not something you do just for fun.
So could this be a sign that they're gearing up for a Solana ETF?
Yeah.
Because if that happens, well, it would make it way easier for big money to flow into Solana.
It definitely could. I mean, an ETF would make Solana much more accessible to institutional investors who are used to, traditional financial products. It'd be a big deal for adoption.
Right, right. It's not just about Bitcoin and Ethereum anymore, is it?
Nope. Seems like institutions are starting to see the potential in other blockchains, especially ones like Solana, which are known for, speed and low transaction fees.
Interesting. Okay, so moving on. Let's talk about Tether. They're the company behind USDT, one of the biggest stablecoins out there.
Yeah, one of the most widely used stablecoins, pegged to the US dollar.
Right. But they've had their fair share of, let's say, scrutiny in the past, questions about their reserves, transparency, that kind of thing.
That's true. They face some skepticism.
Well, it looks like they're trying to address those concerns. Word on the street is that they're planning a full audit by one of the big four accounting firms.
Wow, if that's true, that would be a big step. Those firms have serious reputations. They'd be under a lot of pressure to do a thorough job.
Totally. It feels like they're really feeling the heat, especially with the new EU crypto regulations, MiCA, coming into play. And they also brought on a new CFO recently.
It seems like they're trying to show that they're serious about playing by the rules, about building trust with regulators and investors.
Because let's be real, trust is everything when it comes to stablecoins. It's right there in the name stable. People need to believe that the asset is actually backed by something solid.
Absolutely. For stablecoins to really work, that stability has to be rock solid.
Okay, so shifting gears a bit, let's talk about regulation. The good old SEC.
Ah, yes. The regulatory landscape is always interesting.
Understatement of the year. It seems like there's still a lot of debate about how to approach crypto regulation. At a recent SEC roundtable, a former SEC official argued that there's no need for any new rules.
Really? So they're sticking with the idea that existing securities laws are enough.
Yep. They're saying those laws can handle crypto just fine.
Interesting. I mean, on one hand, you have people who think those laws are outdated for this new technology.
Right. But on the other hand, you have people who worry that creating completely new regulations would stifle innovation.
It's a tough balance. And all this uncertainty isn't exactly helping the industry, right?
No, not at all.
Yeah.
And speaking of uncertainty, Caitlin Long, who's a pretty well-known figure in the crypto space, she's predicting that we could see more debanking issues until 2026.
Debanking? You mean banks refusing to work with crypto companies?
Exactly. And she's linking it to potential future appointments at the Federal Reserve.
Wow. That's a long time for the industry to face those kinds of hurdles. It's already a big problem for a lot of businesses.
Okay, so let's lighten things up a bit. We've got to talk about meme coins, right?
Ah, the Wild West of crypto.
For real. There was this story about a trader who made a ridiculous amount of money on this meme coin called BUBB.
BUBB. I haven't heard of that one.
Yeah, it's a newer one. Anyway, this trader, he got in early, rode the hype, and then...
Dumped it before it crashed.
Exactly. Classic pump and dump. But it raises all sorts of questions about insider trading, It's a bit shady.
Definitely. It highlights the risks in that space. It's so volatile, so easily manipulated.
Yeah, meme coins are a gamble. Speaking of things that might not last, LG is shutting down their NFT platform. Remember when they were all in on NFTs?
Oh, yeah, I remember. Didn't they have some big plans?
They did, but the NFT market's been cooling down, trading volumes are way down, and, well, it seems like LG is shifting focus.
It's a good reminder that not every trend in crypto is going to stick around.
Exactly. Okay, so before we wrap things up, a couple more interesting developments. Pakistan, of all places, is considering using their excess energy for Bitcoin mining.
Really? That's fascinating. I guess they see it as a potential way to attract investment and boost their economy.
Yeah, and they're pointing to what they see as a more pro-crypto stance in the US as a positive sign.
Interesting. It shows how crypto mining is becoming a global phenomenon. It's not just limited to a few countries anymore.
Now, this last one's a bit of a curveball. Max Kaiser, who's known for, well, his strong opinions.
And put it mildly.
Exactly. He's doubling down on his prediction that gold-backed stablecoins are going to overtake USD-backed ones.
He's been saying that for a while now, hasn't he?
He has. But with all the geopolitical uncertainty happening, he thinks people will start to lose faith in the dollar and turn to gold as a safe haven.
It's an interesting thought. I mean, gold has been a store of value for centuries.
And finally, this one's a bit controversial. Tornado Cash, the privacy tool that got hit with sanctions, is back.
Back, but I thought it was shut down.
It was, but it's been ported to a test net called MegaETH. This new version is supposed to allow for private transactions on a high-throughput blockchain.
Wow, so it's back, even if it's just in a testing environment. That'll definitely raise some eyebrows with regulators.
No kidding. So that's it for our deep dive today. It's crazy how much is happening in crypto, right? We've got institutional interest in altcoins, stablecoins trying to clean up their act, regulatory battles, the Memecoin frenzy, the NFT slowdown, and some wild ideas about the future of stablecoins and privacy. It's a lot to digest, I know, but hey, that's why we're here, to help you make sense of it all. Thanks for listening. Don't forget to subscribe so you don't miss our next deep dive.
And let us know in the comments which development you think will have the biggest impact. We want to hear from you.
See you next time.